Hey, it's Mike with PriceActionTradingSystem.com, and it is Thursday. It's September 12th. This will be our chart lesson for today, and this is going to wrap up our week. No chart lessons on Fridays, um, so we won't be back again till Monday. It's been a pretty good week. We had a couple of weekdays where we didn't get a lot of trades, but today was a great day. Today was one of those days where you've got a range. You can see the big picture here. The resistance is very clear and the support is very clear. These are the kind of ranges that you like. Um, the one thing you got to be careful with a little bit on these kind of days is in the middle here. Once you know when it's very clear this is a range day, which is when we pretty much bounced down here, and then maybe even when we turned down here and came back down and bounced again. But once you know it's a range day, just be a little careful about taking trades in the middle. That's where you get more failures. Your best trades are going to be off the shorts, off the resistance, and longs off the support down here. But the one good thing about this range is it's big enough where there's trends, so you can play the trends too within. Just be careful once the trend starts to play out up here about continuing to get long. You got to be a little careful about that. I mean, um, this was a good trend, so I continued to have some longs on this one, but generally you got to be careful getting long up here into the resistance. So you won't see a lot of trades like I do here. Really, we just started going sideways again. So you won't see a lot of longs, and you won't usually see a lot of shorts right into the support area either. You just got to be real careful about those, because because when you get to the bottom, you're looking for prices to turn and go up. And when you get to the top, you're looking for prices to turn and go back down. That's the way ranges work. And when you get a consistent resistance and a consistent support, it makes it so much easier because you know what's coming. I love these kind of days because especially when you get a lot of shorts and a lot of longs off the lows, or rather, and a lot of shorts off the highs resistance, because it's very predictable. You know what's going to happen just about every time prices come up here. Look what happened if you just shorted every time up here and bought every time down here, even blindly, you'd had a great day. I don't recommend doing that. Don't get me wrong. Don't be doing that. But there's a reason why that works so well. So anyway, let's. I'm gonna back out. I'm gonna go through these pretty quickly. I've got another obligation coming up here quickly, so I'm doing this a little early today, and I'm gonna move through them pretty quickly too. So um, just bear. But 7 o'clock came right in here. I get this question a lot. I probably don't say it enough, but I start trading around 7 a.m. Central Standard Time every day, and I quit at 2 o'clock. And I enjoy being. I'm usually done by well before lunch every day. Unless I'm managing a runner or I've had there hadn't been a lot of trades in the morning, or I had a rough morning or something like that. I may make a few trades in the afternoon, but very rarely do I ever take a trade after lunchtime. So I continue to mark all those trades so to help everybody. And that's another point. Every so often somebody stops in and they look at the chart and they say, well, anybody can mark the trades after the fact. Yeah, most anybody could come in here and say, hey, you should have went long right here and you should have went short right here. But could they tell you why? That's the key to this, and people just don't get it. Usually those people are either troublemakers or they're failed traders. They don't know anything about trading, or they're the internet gurus, internet trading forum room gurus that think they know everything and they don't know anything about trading. So I can usually tell within 30 seconds of somebody's comments based on what they say if they really know what they're talking about or not. Most of these people don't have a clue what they're talking about, so just keep that in mind. But anyway, let's talk about the trades. I don't want to get off on that. I don't even respond to them anymore. So some of you guys, I saw y'all responded. Just let them say whatever. It's their loss. If they don't want to learn anything, it's their loss. It's free. You can watch this video every day and compare your trading to it. It doesn't cost you a dime. And if it's helpful for you, that's great. Uh, and if you don't find any value in it, I'm sure there's another place on the internet that you can pay for and maybe learn the wrong thing. So anyway, let's talk about the trades. 7 o'clock came right in here. Notice what happens. The thing is, you got a clear trend. Oh, that's another thing I meant to say. There's a clear trend working down here. I didn't have that on early this morning because by the time I posted the chart, it was 9:30, and this was all out of play. So I may not show you all the first stuff out of the morning unless it helps with the trading. This did, I guess, help with the trading here. But by this point, you could play this. You could just play this move here, and the fact that we really were just playing a range. I don't have this line drawn all the way across here either, but this was a range by this time. And so you didn't really need this trend line, but I put it on there because somebody asked about it, and it is a valid trend line. You can see we got the break, moved to a new low, and we reversed. But in the big picture, we're just going sideways here, and in the big daily picture, we were sideways. And you didn't really need this uh, per se because we were just playing this sideways stuff here. So anyway, I just want to throw that out there in case anybody else was wondering about that as well. So, but notice you had this new high here, and you tried to go higher once, and then you tried to go higher again, and you really got a double test of this level here, a big bearish bar, and it is a second entry short. Notice that low, you go first, second entry right here, and that's just how bearish that bar is. It probably traps some people to the long side. Looking for that next leg up after this big rally up. But that's a great place to go short. Your hope is it's going to drop on down, but we end up just going sideways. And so we're moving along here. I don't see anything I like to the long side here. You got to have a little bearish bar at the top or a little bullish bar at the bottom to take these trades in a range this tight. And we don't have that. Also, the overall bias at this point is probably still down, because we traded down into all this stuff, and so you still have a little bit of a bearish tendency, so you're going to have more bearish trades. This is one that you might have considered here as well. I didn't mark it because there's not a lot of room to these lows. We had been a little bit lower there, so that's another possibility. You might have taken that one. I did not mark it. I'll go ahead and put it on there. I'll leave it red. I mean, this probably should be green. It's just a first entry, and we were really going sideways, so you could have traded it as a range on a first entry, but you just didn't have a lot of room here. If you had enough room, you might take it. And really, this is really your signal bar, but they both have matching highs, so you could treat this as a signal bar if it's a really good setup, and it's just not a great setup in my opinion. Here you get the second entry and a bearish bar, and you've got enough room, and you got a bearish entry now, or second entry right there. So, and this actually went higher first and turned and went out the other side, so you could have had your sell stop right there. Quick easy scalp, and then it bounces again. And that's what you got to worry about. You got to have enough room because it's probably going to bounce here each time. And then finally, this is a failed breakout. This is one you might consider as well. I didn't mark it. It's only a first entry, so I didn't mark it. But and two, this was an inside bar to a doji, so that's why I didn't like it. I think you want to wait on your lower high, and your lower high is still outside this resistance area, and it hadn't really acted as support yet either. So this is one of those, and you're actually above the EMA and the support resistance line there. And so this is one of these where, hey, you probably ought to wait on the lower, a failed second entry, the reversal pattern, a failed second entry long, and that comes here. And technically that's not a failure, but it still you still should have expected that to go higher and make another leg up. And when it doesn't, if it turns down here, you treat that like a reversal pattern and a failed second entry long, and look at it go. And you might, depending on how you entered this, you could have had a runner, and boom, off it goes. And that's a pretty good setup right there. There's another little pullback to the trend line here, but you might end up with a failed break lower here. You're not quite back to the EMA. I just think unless you've got a runner going here, I don't want to enter there. And then, of course, you bounce down here at the overnight lows. We did go a little bit further. There's your overnight lows, is this line right here. We dropped a little lower, then you get a higher low, but again, it's right back into the EMA. So see if you get a reversal pattern. You actually get one here, but you got two dojis looking things right and another bar. And so I think you want to see a little better setup than that. And then of course it comes back right here, gives you a double bottom, a third touch of that trend line, confirming it, and you're going long above the EMA. So that's the better place to enter. It's not a perfect signal bar, and it's only a first entry counting off the highs. But if you want to be a little bit aggressive, that's the place to do it. And then notice we run up and then we pull back. First entry, you pull back to the trend line. This actually went lower, turns and goes out the other side and closes on its high. You may not could have got in this trade if you waited for this to close. But the key was when it broke lower, you should have had your buy stop right there just in case it's a failure. And sure, I mean, you anticipate these trades. And sure enough, it is. And that's the trade of the day right there. That one trade. You're guaranteed a runner right there too, and you never took any heat on that trade at all, and you'd be scalped out of that in a blink, and your runner would be way up here in a blink, and so that's as good as it gets right there. There is a higher low here, but the fact that we just came off the high, we're not quite there, but that's real close at that point. And this is just a first entry. It's a higher low for, after that big move up. But generally, you take those moves back and start over pretty quickly. And so we could have, you may break higher here and just trade on back down. I'm not sure exactly what triggered this. There wasn't a news item at this time, but if you look at the news, there was something came out about Trump and coming to some agreement with China or something, or getting it postponed, and the market must have liked it for a minute. And but notice we did end up taking it all back. And that's generally what happens. If you get a crazy move like this, it won't be long until the market takes it back and resets and starts over again back at the same place. And that's kind of what happened here. You'll see that a lot on news days. If there's a news item that triggers this, a scheduled news item like FOMC or something like that, usually within an hour or two you've taken it all back. If it doesn't and the trend continues that day, within a few days you'll take it back. It's like the market says, hey, that was not normal. Let's go back to where we were and start over, and then see what happens from there. And that's pretty common. I mean, that's probably not exactly what happens. That's real simplified, but that's the way I like to describe it. Is that, hey, the market did something dumb here that it probably shouldn't have. Because there was a news item or a spook or in the market or something, and it just resets itself and starts over from that same point or nearby there anyway. So keep that in mind. But anyway, come back to the trend line here. Again, it's only a first entry, but this is your signal bar, way too bearish. This has been a little volatile. You might have gone short up here just to short that because we're so far away from the EMA, and that's a big bearish bar, but it is an up-down bar. But being that far away from the EMA and that being the high of the day, we're probably going to snap back. You'd rather wait on a lower high, but you don't get one here. Your lower high doesn't come till here. So, but notice what happens. You bounce up, you make two legs up, and you test that again. Now you got a double test of the overnight high, big bearish bar, a little ways away from the EMA. That's the better place to enter. Of course, now because you're being safer, you don't get this big. I mean, that's the thing about being aggressive, is that you always get, with great risk comes great reward. Here you don't have as much risk, so you don't get as much reward. Here you took on a little risk to enter and you get a big reward. Same thing. I really don't look at this as being too risky. This is just following the rules right here. If you just followed the rules, taking a second entry off the trend line right here on that little trap that went lower first, you just followed the rules there, and look what you get, a nice move. And then we kind of tightened up. I actually had moved this down to here by that time. By the end of the day, we were back up at the highs, but you can see that resistance there. We're just kind of chopping along. Finally, you got a little entry here. Notice that this is really just like a double top here. And when we tested it, it's like a double test really of this level here. And it actually broke higher and turned and went out here. And so this is one of those where you look and say, hey, I'm probably going to have my sell stop here. And just try to get a scalp out of it. You don't know that it's going to do this. But again, just by following the rules on a little trap right off that trend line, you get this huge move. And you would have got a runner here. I don't think I would enter this way down here. right into that double bottom. It's pretty risky. That's a huge bar. But if you saw it break higher and then turn down instantly and start running down, just have your sell stop right there, because this is off what looks like a trend line. We just came off the highs of the trend channel, or not the trend channel, the range, and so we're probably expecting prices to come down here. You don't know it's going to do it that quickly and that easily with one move, but hey, that's what happens sometimes. So there's a lower high here. I didn't mark this one because it was really kind of volatile here again. It did break higher again and turn down. I meant to put a green one there just so I would remember to talk about it. I mean, that's one you might want to take, but I think you'd be better off to wait because you got to go low. The thing is, it's probably a trap because it bounced, and people probably thought we were going to come back up here and test the breakout area, because you usually do, but we didn't come back and test that till here. Um, but there is a second entry short right there, or I'm sorry, there's not a second entry here, and we run on down and touch the bottom, and then you bounce right where you would expect it to, the overnight lows. First entry, you run back up to the trend line. Second entry, another big bearish bar. You got to take that one. Where does it bounce? Same place. And you could have looked at this as a double test, and you're a little bit away from the EMA. It's just like up here, it's a little bit aggressive, but with a lot of, if you take some risks, sometimes you get some reward. You don't get much reward on this one. You get an easy scalp, but I wasn't convinced this move was over yet, because we tried to go higher and couldn't get above the EMA, and we haven't even gotten above the EMA yet. That's kind of the difference here. We've traded above the EMA, and you got a clear trend line, where here you had a break of the trend line, and you've already you don't quite have a low yet, and it bounces here, so it could push down, and it does try to go lower again, but it can't. And then this is the better place to go long, but I'll talk about that in a minute. But anyway, you may take that long, and we're just kind of going sideways. I don't see anything here I like. You're still really kind of making lower high. You're not really making lower low. This just looks like a range. It is a range. But notice you finally bounce here, and you made that low. You made another one. You tested it. You basically, you made that low. You've tested it once. You tested it twice. You tested it 3 times. You tested it 4. And you can really look at these two as a double test of this. And you got a nice bullish bar. You got enough room to get out, as long as you got enough room for here to get out before it comes back to here. But notice we did come off the low of what looks like a channel here. You really didn't have a whole lot of evidence where this channel was here, if it was even valid, but it looks valid. And so we just came off the low, so we're probably at least going to test this high, maybe this trend line, and who knows, we might go all the way back to the top. So this is another one of those that it's probably worth taking a risk on it. There's a higher low here, but I don't like it as much. It is a breakout pullback, but there's still some resistance right here. And you see, if you put your line there, you're really going long right into that resistance now, and you're real close to this trend line. So I don't like that one. I say you better off to skip that one. And it runs up here, and you actually get 2 legs back and a second entry right here off what looks like a possibility of a trend line, especially if you drew this up here first and drug it down. That's where you would expect it to bounce. But this is really your signal bar, and it's too bearish. I see people all the time see this bar and want to enter here, but that's too late. Because you may only go up enough to get your scalp, and then it turns down again. And so you can't enter late. You either have to enter here, or if you wanted to wait till here and let it break above that bar, then drop your limit order back here and see if it would fill you, and then go. If you're, if you're reading it and you're thinking we're going higher, you're probably going to get another leg like this one, or at least go back to the high. So, that's what I would be looking at, is another leg like that, or at least going back to the overnight, or to the highs of the range. And see, we couldn't quite get that. We got close, but the problem is this is a range day, and you can't consistently get through all this resistance. So by, up here we would have moved that back. So I just don't think that's a good entry. Let's wait and see if we get a better one. There's a higher low right here, and this one broke lower and went higher, So that one's a possibility, but I think you need a failure here, and you get that right here. This one actually broke lower and turned out. You are kind of into that high, but this is off this trend line, and it's working off this short-term one here too. Now you got a reversal type pattern, so I like that one better. This one probably should at least be green. I just didn't like that one because it's like a little breakout pullback, but I wasn't convinced that we weren't going to try to push back down here and test this breakout. Notice we never tested this breakout. We just pushed on through it and kept going. Prices generally will test that. Looks like we're headed back now to try to test that. So, but we were just, at this point, we were headed all the way back to the highs. So, and of course, you tested those highs again. You made a lower high with a bearish bar way away from the EMA. That's a good, that's the kind of trade you want to take. That's a high probability trade. It does bounce at the EMA and then off the trend line. And you might have considered, let me put this on here. There's really a trend line right here. And even though you get a close outside and maybe a new low, this trend line's been strong enough, and this is a second entry. Because here's your high, first entry, second entry. So even though it's not really two legs down, you'd probably consider it as that. You probably want to go long there because you're probably going to run up here and test this one more time. And you do. There's actually a second entry short right there, but you don't want to take any shorts yet. But when we make this double test of that level with this bearish bar a little ways away from the EMA, I'm gonna go short there. I mean, we've got now plenty of evidence that that's strong resistance up there. So you should be able to get a scalp out of that, and probably going to get a scalp out of this one. And if you got a good setup here, you could have counted on a scalp out of that one. Of course, this one's still going, but you could have at least counted on a scalp out of that. Notice that that's the first break of this one, and you got that high, and you get a first entry, and then a second entry with a fairly bullish bar. This one I went back and forth about. It's real close to being green because this is a range day, but yesterday we saw something similar to this and we pushed on through. So there's a chance we could have pushed on through and made a new high. And so I think it was worth probably risking because we should have dropped on down if we were going to go lower. See, like here, how we just kept going lower, and here it's just kind of hanging around. So I like that one. I would have liked another short here, but that bar is way too bullish. It's just a little inside bar. They're not as reliable, and that gets you into the 2 o'clock hour, unfortunately. There's another little, notice you made that high, first entry and then second entry. That would have been a great short on most days, but that's well after 2:30, and it's just too late in the day. And there is a trend line there too. I don't have it on there, but you can see there's a little trend working down, and you can see it fits real well on the other side. I mean, that's the beauty of this. When you do this long enough, you don't even need these trend lines anymore. I still put them on there, but for the most part, I can see these lines before I ever put them on there because I've done it for going on 15 years. So it makes a difference to keep that in mind. Anyway, really good trading day. I love these kind of days. I know these kind of days are not easy for newbies, people that are not real experienced, because it's hard to trust that it's going to turn down. But when you watch this over and over, day after day, month after month, year after year, you start to get a feel for what the market's doing. Doesn't mean that you couldn't get short here and it reverse and go higher, but the odds are on your side. When it's turned down there multiple times, I mean, we've turned down there all day long. I mean, each time maybe we got just a hair. A couple times we got a hair higher, but we never really closed or traded up there consistently. And every time down here we bounced. Once you've seen prices do this over and over, it gets much, much easier. And you learn to trust it. And, that's half the battle is trading long enough to trust all this stuff. And again, even if you're wrong, you enter here, it turns up and it goes above that bar, well, you don't lose much. And if you catch one of these like here or here, we're easy runners, guaranteed runners. That's why you just, on a day like this, coming off these lows, I'm going to look for a runner. Now, when you get a real tight like here, I'm just going to scalp out of these little ranges. But a range like this where you can get a trend, especially on a failed breakout or some kind of little trap, um, a lot of times those traps rocket off like that right there. They don't usually always go that far, but they'll rocket for a couple of bars, and so you get an easy runner. I mean, even if it chopped the rest of the way up, it usually doesn't come back that quick to take your stop out, and that's where you get those easy runners. Just like right here, if you got that trade, even if it would have come back to where most people would have entered, it couldn't have got back up here where this was the one that broke higher and turned down. You would have gone short one tick below that green bar. Prices didn't get back there till, when is that? 11:15, 11:20, somewhere in that range. And so you could ride this all the way down real easily with no stress, no, your stop never even coming close to being tested or anything. The ones that make it hard is when you enter like here and it starts backing up and makes a double bottom, but doesn't quite stop you out, but your heart's pounding and you're worried. It looks like I made a mistake, and then suddenly it can't get through and it gives up and it goes higher. Those are the ones that make your palms sweat and your heart flutter and thinking that you've messed up and that kind of stuff. I've been there, so I remember those days, especially if you're newer to trading. Um, you know, Losses are part of this game, so you can't let a loss screw you up. If you have a loss, basically if you're winning at a high clip and you have a loss, that just means you got some winners on the way. But if you're just, if you're new, you're probably going to be losing more than you win, and but even once you get good at this, there's still going to be losses. It goes, it's part of trading. We expect to win and we expect to make money every day. And so we don't get excited about making money or having winners. On the same hand, we know that in this game, no matter what you do, there's still going to be losers occasionally. Even if they're few and far between, you're still going to have a loser. I don't care how good you are. But it's part of what we do, and we don't let it shake us up. And we know that, if we're trading at a high percentage of positive trades, if we have a bad one, we know, well, hey, we got a bunch of good ones coming soon. Even if we had two losers in a row, that just means even better odds. If you can hold your composure and continue to read the chart well, you're not going to have two or three losers in a row. If you're having two or three losers in a row, you're not reading the chart very well, and you've got work to do. So just keep that in mind. But if you want to do this, never give up. And I send this email out about once a week, once every 2 weeks. The reason 90% of all traders fail, those are the numbers you hear, and I think they're pretty accurate. I think people that learn price action do not fail at that same rate of 90%. It's probably only 60 to 70% fail that actually come in with and understand what we're trying to do and how long it really takes. I think they don't fail at near the same rate, but it's still a pretty high rate. But what it is most people just have unreal expectations. This job pays well, and you don't have any overhead, you don't have any office, you don't have any customers. Well, I say you don't have any overhead. All you need is a quiet place, a quiet room, a good internet, a fairly decent computer, laptop, whatever, with a big screen, and a good internet. If you got those four things, that's the only overhead you got in this business. You don't have any customers. You don't have to deal with any employees. You don't have to, open an office, lease office space, buy an office, build an office, whatever. You don't have to deal with customers. You don't have to deal with all that stuff. I mean, it's the best of both worlds. But at the same time, this is just as difficult as trying to be a medical doctor or trying to be a lawyer or trying to be an engineer or any of those professions. And you think about all the schooling you got to have, then you got to get your on-the-job training, and then if you want to be in your own business, and you got to open You got to invest all that money to open your office and hire employees, and then you got to build your clientele, and that takes a while. So it's, you know, it's a minimum for a doctor or lawyer is 7 or 8 years of school. Sometimes for medical doctors it's 10 or 12 if they're, depending on what they're doing and how quickly they get through all their schooling. And then they got to do their residency, and so it's 15 years before they're making money. Most lawyers is eight years minimum before they're starting to make money. If they go to work for somebody, if they're opening their own business, working for themselves, it might be 10 or 15 years before they start to build their clientele or hit that big case or whatever. So don't expect this to be any easier. It doesn't take that long for the average person, but it takes much longer than everybody expects, and that's the biggest issue. Most people think, I'm going to read a manual, I'm going to study this manual for a few months and trade for a few months, and I'm going to be a trader and I'm going to make money. And it just doesn't happen that way, because you need the experience and you need the screen time. And the first key is to learn the proper materials. Well, I'm giving you that, it's here. I'm showing it to you every day in these videos. But it's up to you to put in the study time and to be able to figure out and see this live in real time on your own. The first step is to be able to see it after the fact, and that's when the light kind of goes off and people start to see it at the end of the day after the fact. And once you can do that, all it amounts to then is just a lot of screen time and experience, and then continuing to study your charts, and you will start to see. And then one day you'll see one of these reversals and say, hey, this is a support, and you see this reversal in real time. That's your first one. Then maybe you see a second trade up here, and each day you start to see more and more of it. It just takes time. It's not easy to, it's not hard to do, but it's not easy either. But it's mostly because it's time. It's all the time that it requires. And that's where people have unreal expectations. They think they're going to read a book or read a manual, practice for a few weeks, and then they're going to make money. If you do that, you're going to be what I call a donator. And some of you have heard me use that word before. Unfortunately, in this business, you need donators, because there's no money unless somebody's losing money. This is a zero-sum game. You can't make money unless somebody loses money, and so it's unfortunate, but we need donators. But you don't want to be the donator, so stay away from being a donator. Don't trade live until you've proven you can do it on the simulator. And the way you do that is you want to start with about 10,000 in your simulator. And when you can double that, then you can consider going live. Before that, forget it. Don't dare risk any of your trading capital, because you will simply be a donator, and that's going to be that. But there's thousands of donators out there every day rolling in here. So just be one of those few percentages that are not a donator. If you don't learn anything else from me, or this video, or this YouTube channel, or my website, or from me, learn that you don't want to be a donator. Anyway, I'm going to wrap it up. That's enough for today. 30-something minutes worth, and I was going to try to be quick. But great trading day. Not the best week overall, but it ended on a good note. Oh, one other thing real quickly. Today is rollover day, first rollover day. We never roll. It's always usually on Thursday. We don't ever roll over on that first Thursday. Usually it's Friday, and every once in a while it's Monday, that following Monday before the volume switches over. So what I do is I open both charts, and then from those two charts, I'll just, when I come in tomorrow morning, I'll open the two charts and I'll look at them. And it'll probably be tomorrow when I roll over to the other chart, but it may be Monday. So just keep that in mind. I get that question a lot. Yeah, you definitely are not going to roll over the first day, because if you look at the December chart today, you'll see there's no volume there. And so you can't really day trade that. So wait till the volume rolls over and this chart starts to look like the smaller chart, and the other one looks like the bigger one. And that's usually on Friday or the following Monday. So keep that in mind. I'm going to wrap it up. We're done for the day. We're done for this week. I'll be back Monday. This is Mac with PriceActionTradingSystem.com, and we'll see you next time.